Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes and entertainment. And with that, we'll take one last look at the disclaimer, and let's welcome Dimitri Pargamonik to the stage, who will talk about option strategy benchmark percentile rank. Welcome, D. How you doing?
Good morning, Will. How are you?
Welcome back. How was Philly? Pittsburgh. Everything good?
Yeah, it was good. Let me come back. Yeah, we dropped off my daughter. She's now living there, so it was a kind of interesting experience, emotional. But you've dropped off already. What, 2 kids in college?
Well, one daughter, and my second ones are a year away. But
okay.
We dropped off Liza at Penn State on Friday, so she did want me to go this time, so I'm going to help as well.
Okay. Yeah. So it was good, and Pittsburgh's is a interesting city. We kind of drove around and across the bridges. So it was nice.
Yeah. Now you have 4 years to explore it, which is awesome.
Exactly.
All right. Today we're going to be talking about option strategy benchmark.
Yeah. So let me navigate to a symbol. Let's use Google here. And the idea here is, if we're looking at a particular strategy that we may be interested in options, so you could have, for example, straddle and bull call spread, strangle. You have all these strategies, and if we wanted to quickly get a sense of, well, where's that cost of that strategy is today, and is it on the high end or low end of its historical range? So similar to the VIX, when we think about the implied volatility of a stock, let's say Google, we look at the VIX, here's a 30-day IV, and we say, okay, it's 29.4. Well, what does that mean? It's right now, it's just a number. We need to put it into perspective. It's relevant to what? Is it high or low? So we look at it relevant to itself. So Google has an implied volatility benchmark. So the 30-day IV is a benchmark, right? We track it from day to day. Is it going up? Is it going down? And is it on the high end or low end? So 29.4 for Google could be, for something like SPY, could be very different, right? 29.4 for SPY would be very high. For Google, we could see it's on the moderate. It's in the 53rd percentile rank. And the percentile rank compares it to historical values. What it means is that 53% of our observations in the last year, so if we took daily observations in the last 252 days, 53% were below 29.4 and 47 were above. So now we kind of get a sense of if it, that it's in its median range, basically, like, almost half above, half below. Well, what if we wanted to do it for strategies? Because that's an implied volatility. But strategies involve the cost of the strategy, the straddle or strangle or a risk reversal. There are different ones. And maybe we want to measure that strategy, and where does that fall on the historical range? Some strategies also involve buying and selling an option, like a call spread, or you could do a calendar spread. So let's look at an example. I'm going to go to the left-hand side menu. Let's click on options, and we're going to go strategy benchmarks. And this, let's click on this menu to close and expand our screen. And over here, we have these tabs that track the cost of strategies using a benchmark, similar to a VIX, but this looks at the cost of the strategies. So, for example, we're going to go in Straddle here, and this looks at a 30-day at the money straddle. So 30-day constant maturity, because when we look at options, we need to look at the maturity, because a straddle that has 2 days to expiration will cost different than 30 days or 90 days. So this looks at a 30-day constant maturity, and it creates a benchmark using the surrounding data. And because the stock moves around, right, we can't really say the dollar cost of the straddle. We change it to the percentage of spot price, right? So straddle that's $10 for a $100 stock is different than for a $500 stock. So we do it as a percentage of spot price. So here the current straddle is 5.4% of the spot price. So if we took 5.4% times whatever the spot price is, that would be the cost of the straddle. So we use percentage. And this way we could track the cost, the percentage cost, if it's going up or down. And here's the historical values. This red line, I'm sorry, dotted orange line is the average of all of them. And it allows us to visualize the cost of that straddle, how it moves around the average, for how, if there's a lot of variability, where were the extremes, where does it tend to trade? So this lets us visually look at it. Then we could compare that to the 52-week average. So that's the dotted line. So we could see that the percentile rank is 51%, which lets us know that right now that cost is basically on the median, half or above, half or below, approximately. So we're right, in the middle range of the historical observations. If it was 100 percentile rank, we would see it almost up here, because then the historical observations, 100% of the historical observations would have been below the current level, right? So we're comparing the current level relative to the prior 252 days. If it was 0%, that would mean, like, whatever today's value is, we haven't seen any values below that in the previous 252 days. So 100% would be above. So that would be the percentile rank. And then this gives us a quick way, once we know what these numbers are, to scan and see strategies and where the cost is relative to history. So over here, we could go to the 90-day. Well, here's a 60-day. So the 60-day, we could see is different. That's in the 24 percentile rank, right? So the 30-day right now is around the median, but the 60 days on the lower range, 24 percentile rank, meaning here we are over here, at the end, but we could see 24% of the historical observations were below the 7.3% cost of the straddle. 90-day, 38 percentile rank, and here 120-day in the 24 percentile rank. And we could do that for other strategies. If we were looking at, let's say, debit call spread, we could define it as 30-day maturity. It's the at the money and the 5% out of the money. So that's also median range, 35th percentile range, 57th percentile, 51 percentile. But I'm going to come back to the straddle, and that's where we started. I'm going to end it here. I wanted to show you guys, because as traders before, there are a lot of stuff to look at. We always have a lot of stuff to evaluate and look at, and how do we make these quick initial evaluations, well, we rely on, benchmarks, historical perspectives, and certain metrics to help us make these quick assessments before we go deeper into that research.
And
All right,
this is
well,
one of the great tools we offer. This isn't available just anywhere. Dimitri and our team created this. I don't know, probably 4 or 5 years ago for us to use, and it's a wonderful, wonderful tool to get a quick snapshot of where each trade, the strategy may be priced relative to its performance over the past. So it's very, very good tool. Great
relative
job,
to
Dima.
costs, right?
Yeah, relative to its costs. Correct. All right, everyone. Thanks for joining. Great job as always, D. Welcome back,
Thanks.
and we will have a show again tomorrow and the rest of the week.
All right, awesome. Thanks everyone for joining. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
All right, my friend. We'll see you tomorrow. Thanks, D. All right, everyone. Thanks for joining the Market Chameleon pre-market show again. It is Wednesday, so we will see you Thursday and Friday. Everyone have a safe, great trading day out there. Let me know in the chat if you got your emails today, because I did change something based on an email I got from Jim about the sending. So I used a different sender to send it. I wonder if that works. Anyways, everyone have a great day. Stay safe out there and trade in peace. Bye, everyone.